Where are you going to put your money? Big tech is not like the compelling new thing, it's the understood thing. My strategy as a tech investor, Brian, is you buy something that everybody in the world needs, nobody can stop, and 99% of the world doesn't understand.
And you have also become probably the most famous Bitcoin evangelist in the world in the process and been embraced by the community. What's that been like for you? Because that's a transformation.
If you wanted to give education and erudition to 5 billion people, you can't do it with MIT and Harvard and libraries and books and teachers and professors. You need to do it with digital books and digital education. You need YouTube and iBooks, and that's why Google and that's why Apple are exploding in value. If you want to give wealth to 5 billion people, Brian, you can't do it with gold. You can't do it with land. You can't do it with buildings. You can't do it with 20th century stocks. You can't do it with collectibles and art. You can't do it with diamonds. Those are 20th century property. You can give 10% of the people wealth that way. You can give 10 or 20% of the people wealth with banks and stock exchanges. If you want to give 5 billion people wealth, you need to give them digital property. You need to give them digital gold on an open monetary protocol running on a $50 Android phone. And that's why I say often Bitcoin is hope.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Michael Saylor, the American entrepreneur, technologist, author, business executive, and Bitcoin evangelist. You are the CEO and chairman of the business intelligence company MicroStrategy, which you co-founded in 1989, a few years after graduating with a double major from MIT. You're the author of the New York Times bestselling book, The Mobile Wave, How Mobile Intelligence Will Change Everything, which correctly predicted the sharp rise of technology giants Amazon, Apple, Facebook, and Google, while highlighting the impact of mobile and social networks on global economic development. You have described Bitcoin as the apex property of the human race. And last year, you began a massive investment drive that has seen MicroStrategy purchase over 100,000 Bitcoin, worth over $3 billion today. Michael, welcome to London Real.
Thanks for having me, Brian.
Great to have you here. Before we get started, I got to ask you a couple questions about MIT. I got there in '89, so I missed you by a couple of years, but it's a very special place. And I still remember walking through that front door of Lobby 7 and looking up at the dome. And even though I was this punk kid, I still somehow felt honored to be there. And I think it changed me in so many ways. Some I don't think I'll ever really understand. I also had a fraternity experience there, which was a really important of my evolution as well as kind of like a man. Just curious what the experience was like for you and what it was like as an 18-year-old kid from Ohio going to Boston, Cambridge, and going to a place like MIT.
Well, it was definitely a very, very, maybe the most important formative experience of my life. If I think about the impact it had on me, when I graduated from high school, I was the valedictorian. When I got to MIT, I was one of 400 valedictorians. Every single person at MIT was the biggest overachiever in their various community. And so it was interesting to be surrounded by so many overachievers. Also, I came from a middle-class family in a public school, and I came in contact with a lot of children from upper-class families and private schools, and they had 2 years of calculus, or they had 2 years, 1 to 2 years of college education before they showed up, and we were just going to college, So I saw people from every class. I think out of my 9 fraternity brothers, there were like 6 or 7 Eagle Scouts. It got to be kind of silly. And then I saw people from everywhere in the world, right? So MIT brought together global elite overachievers. That was interesting. I think the other thing that was interesting was MIT had this ethos of do it yourself, think for yourself, and be fearless. So, they would give you a very difficult problem, and they expect you to solve the problem from first principles, and they gave you the tools to do it. I think the third thing I saw was I had some of the most brilliant fraternity brothers. They're the kind of guys that, 18-year-old, 19-year-olds, and they're the kind of guys that get bored in the summer. They take the car apart, put it back together again. One of them took cars apart for a living and put it back together again. The other one had launched a computer software gaming company, while he was in high school, and launched a Pac-Man knockoff, successful enough to get a cease and desist letter from Atari. And so you just saw all these examples of excellence, and it gave you a lot of confidence. I think that's what I took from MIT, confidence.
And that fraternity experience, how can you describe that to someone? Because I think it's so often misunderstood. I bet it doesn't even necessarily exist anymore the way we knew it. But for me, it was so important. I spent 4 years living in my fraternity. I never lived in any other public housing. I grew up, like you said, with people from all over the world, different classes. There were the guys that couldn't afford pizza and the guys that could afford pizza. That was like the divide. But what was that? Because I know you co-founded MicroStrategy with one of your fraternity brothers. So what was that like?
It was, if you dumped a bunch of brilliant Eagle Scouts together into a house to the age of 18 and 22, and they all spontaneously organized a government, then that's what a government, an ecosystem, and a culture. That's what I saw at MIT. It's in retrospect, it's quite amazing. We ran our own finances. We ran our own work week where we would maintain the house. We had sophisticated everything. We had elections. We had a CFO. We had a head of maintenance. We had a social chairman, and we orchestrated the most elaborate social events, the most elaborate construction development events, fundraising events, about Rush Week and all those events, trips. And you kind of took for granted that a 20-year-old could run an elaborate enterprise, with due process. We had parliamentary procedure, we had house meetings, we had votes, we had all manner of intricacies. So it was a microcosm of the world run by a bunch of people that were 12 to 36 months out of high school. And, looking at it today, so many people expect, big institutions to do everything for them, but we were completely self-reliant at the time.
Yeah, I'm having flashbacks. There were 50 of us at 233 Mass Ave, average age 20, maximum age 22 or 23. Like we had to feed ourselves, clean ourselves, social chair, everything, and then have a pledge class. So you had to go through that whole thing and put them through the process of becoming brothers. And we figured it out somehow. If my wife could see some of the meals we served, she would be shocked. Or some of this, the look of the kitchen on some days, or the sticky carpets after a party. But there was something beautiful about it as well, because we just got on with it and it did function somehow. So some good memories flashing back here. And again, those lessons you say about MIT, it's funny because they don't tell you those things, but it's just this ethos of the place of here's the fire hose, stick it in your mouth, figure it out. You will figure it out. We're not going to tell you how, but we're going to kind of imply that you can do it. And so go. And I remember that too. So really, really brilliant memories. Look, I want to talk to you about Bitcoin today. I want to briefly tell you when I first heard about Bitcoin because it involves a friend of yours. In 2013, I was doing my show London Real after I quit my job in banking. I couldn't take it anymore. And I had heard about this thing called Bitcoin, and I put out on Twitter, who's the one that can tell me about this instrument? And this one name came up in London, and it was Max Kaiser. And so after a couple tweets back and forth, as we called each other out and sized each other up, Max showed up in my kitchen here in Shoreditch. And I didn't know if we were going to have a fight or what. And we had a broadcast. And for 90 minutes, Max schooled me on Bitcoin. And I think I just bought 2 for 85 pounds. I was complaining. There was no market makers, the order book system. And Max really laid it out. And that was my first really experience with it. And that episode's still up. It's fascinating to watch now. And then I didn't know what to do with it. And so in 2015, 17, and 19, Andreas Antonopoulos came back and would always tell us about what was happening and what it could be in the future of money. But again, it didn't hook me. And it wasn't until this year when I started looking at what was going on in DeFi that I got reminded about what I was doing on Wall Street in the 90s. And I thought, wow, this is crazy because I used to do this 30 years ago and now other people are. And we can talk about that stuff later. Tell me about your experience with Bitcoin, because I know you knew of it back in 2013, but I think it wasn't until last year where you really saw it.
You know, in my professional life, I've run MicroStrategy, which is an enterprise software company, for 30 years, and I'm a public company CEO. And most of my mental energy was consumed by competing against Oracle and IBM and Microsoft and SAP and selling enterprise software to everybody on earth. Part of what I did was run a treasury, and our treasury at MicroStrategy primarily consisted of a very conservative, conventional corporate strategy of hold cash and short-dated sovereign debt. And that's what I did for a long time. And occasionally we would take that treasury cash, we'd buy our own stock back. But we didn't pursue any other investment agenda with it. In my private life, as I was a private investor, and there I was a tech investor. I bought Apple, I bought Amazon, I bought Facebook, I bought Google. I wrote about why I bought those things in the mobile wave. But the summary is the best investment ideas of the century, I believe, are you buy into a digital network that is dematerializing a product or a service, or some kind of idea in the civilization, and you wait. Right? Facebook dematerialized friendship. And Apple dematerialized everything you could hold in your hand. It dematerialized wallets and cameras and photos. And Google dematerialized information and books and video. And Amazon dematerialized storefronts. And so those digital networks that dematerialize things, they grew through the web era. And we know that story. And then when the mobile era came along, all that software mobilized, and pretty soon you had a store in your hand called Amazon, and you had a library in your hand called iBooks, and you had friendship and relationships in your hand called Facebook, and you had a camera in your hand, and probably every other mobile device, a tape recorder, the like, and Apple, and I kind of rode that wave for a decade. And in 2020, I knew Bitcoin was around. I knew some people use Bitcoin for something or other. I also, thought it was kind of cool that you could go on markets and bet on who was going to win an election, if you remember that. And I thought online poker was cool, and I thought there were a lot of things that were cool, but I classified them as novelties. I classified Apple, Amazon, Facebook, Google as good investments based on a digital network. And my professional approach was I invest in short-dated treasuries. Then March 2020 hit. The money supply started expanding at 3 times the normal rate. We had lockdowns which shut down Main Street. And we had a V-shaped recovery in Wall Street. And so between March and June, as I watched Wall Street recover, and if you look at the S&P index and the stock market for the past 12 months, it's just straight up and to the right. It's like there is no crisis.
Yeah.
And if you're living on Main Street, Main Street hasn't recovered. I mean, the cruise lines aren't up and running. The airlines have been impaired. The hotels are impaired. Lots of manufacturing business are struggling. There's rampant problems in getting labor. There's rampant supply chain issues, and there's shortages. And so that dichotomy between the recovery of Wall Street and the impairment of Main Street caused me to question my premises about money. I started by questioning my premises about Treasury policy. Brian, I had $550 million in cash, and it was yielding 0% interest. And when the Fed said, we're not even thinking about raising interest rates, the message was, for the next 4 years, you'll get 0% interest on $500 million, and you'll like it. Then I started thinking, then I watched Wall Street recover, and at the S&P, if we actually look at S&P performance over the last 12 months, it's up 37%, Brian. And so if you had $1 billion and you held it in cash, you're up 0%. And if you held it in S&P index, you're up 37%. If you took the same $1 billion of cash and you bought gold, you're up minus 72 basis points. That is, you're up 0%. If you invested in Bitcoin, you're up 269%. So what is the message, right, that the world's trying to tell you? It's that we expanded the money supply. If your long-term saving strategy is put your money in a bank account as dollars or euros, then your money lost, call it 37% of its purchasing power, right? If you put your money into an ETF or S&P index, your money held its purchasing power. If you put your money into Bitcoin, it gained purchasing power. And so as a corporate fiduciary, I got $500 million. What am I going to do? Well, I don't want to hold it in cash when I know that the currency is being devalued and the interest rate is 0. That's a negative real yield. If you calculate negative real yield based on CPI, you might say to yourself, oh, it's only minus 2% negative real yield, or the CPI now is like 5%. Minus 5% negative real yield. But if you calculate inflation based upon asset inflation, the asset inflation rate for a portfolio of companies is 37%. So your negative real yield is minus 37%. And the rule of 72 tells you that you lose half your money in 2 years at that rate.
Wow.
You lose 90% of your money in 10 years. So when the negative real yield got to minus 37%, Brian, it's kind of like you crank the temperature up in my hot tub to 250 degrees, and I jumped out. So how did I discover Bitcoin? The answer is, it wasn't the problem for me until March of 2020. It was an opportunity, but I had other opportunities, and it wasn't a clear enough opportunity that I would change my life in order to go do this thing. But in March of 2020, the big tech trade came to its end. Amazon was, $3,200 a share. Well, I rode it from $300 a share to $3,200 a share. It wasn't going to go up by a factor of 10 or 20 from there. Apple, Amazon, Facebook, and Google were acknowledged digital monopolies and dominant networks, and every 22-year-old taxi cab driver could have told you that those were the winners by March to June of 2020. So where are you going to put your money? You can't, big tech is not like the compelling new thing, it's the understood thing. My strategy as a tech investor, Brian, is you buy something that everybody in the world needs, nobody can stop, and 99% of the world doesn't understand. And that would be the definition of Facebook in 2011 or 2012 or Google or Amazon. You could, if you go back to 2010, you could see Apple, Amazon, Facebook, Google are unstoppable. Everybody needs them. And yet 98% of the people on Wall Street would have told you when Apple doubles, you should sell some, take off the top, and you should diversify into HP and IBM and other. And when technology is more than 20% of your portfolio, you should sell technology and you should diversify into non-technology. So the diversification in that case is selling the winner to buy the losers. And of course, the idiocy is Apple became 150% of the profit of every mobile phone company in the world. Everybody else in the world lost money to compete with Apple, which made all the money. Okay, that's why you don't diversify from the category killer. Amazon won, Walmart stayed, was like a number two, and every other retailer in the world lost in that decade time frame. So selling the winner to buy the losers within the sector doesn't make any sense. And there's a certain arrogance and foolishness from a Wall Street investor that says you have too much tech exposure. You went to MIT, I went to MIT. What I observed is every growth company in the history of the world, going back to the Carthaginians versus the Romans, they were all tech companies. When the Romans beat the Carthaginians, they did it with technology. When Kraft and Heinz and Standard Oil and Carnegie Steel and Andrew Mellon, and the Aluminum Company of America, when they won, they were technology companies. AT&T, General Electric were technology companies. General Motors was a technology company. There was never such thing as an entrepreneur that took a small thing and made it into a huge thing without technology. So it's only the third generation of investors that have forgotten how the company was built, that think it's a non-technology company. So bottom line, when something is no longer, disrupting the world, its growth slows down, it becomes a monopoly. When I got to March, April of 2020, what I said was the big tech trade is a crowded trade, and holding cash is a foolish idea. Sovereign debt is no longer a store of value. Bonds are broken. We're at the end of a credit cycle. My stock was $90 a share. I had $60 a share in cash, Brian. So I had the entire company was worth $30 a share. And the investors, when I asked them, said, cash is trash, right? Give it back to us. And so I hit this existential crisis. I had to go study. I had a problem. I needed a solution. And we were going to take one of two paths. We either had to give back all the capital, and we would have had $30 to $60 a share worth of the stock in a company with no capital base that was growing 0% a year, competing against Amazon, Facebook, Apple, and Google. Good luck with that. Or we had to invest the money in something which was going to hold value or accrete value in a monetary inflation environment. And so we did a search. We considered gold. We considered tech stocks. I already described where I thought tech stock was a crowded trade. It was already done. Buying gold was a good idea in the 19th century. In the 20th century, it's too slow. In the 21st century, it's looking antiquated. Well, I said, I want something like gold, but I want digital gold on a big tech network. What if I could take $1 billion of gold that weighs 30,000 pounds? What if I could take that, dematerialize that gold so it moves at the speed of light, it weighs nothing? What if I wrapped it with an open protocol so I could program it? And what if I could program my iPhone or my web server to do 1 million transactions a second on the block of digital gold, move it at the speed of light, and make it brilliant, smart. And then I plugged Moore's law into it, and it just kept getting smarter and faster and stronger. Well, the secret to everything that worked in the last 20 years, Google, smarter, faster, stronger. Google Maps, it knows which way the traffic goes. It knows there's a traffic jam. It routes you around the traffic jam. It'll talk to you. It'll nearly drive your car for you. It's a better idea than Rand McNally Maps. That's why Rand McNally is worth 50 million or 500 million, and Google's worth 50 billion with Google Maps, right? That one thing. You know, your iPhone, smarter, faster, stronger. iBooks, smarter, faster, stronger. Apple Music, smarter, faster, stronger. So I thought, give me a block of dematerialized gold on a big tech network that's smarter, faster, stronger. Where do I find that? Crypto. Crypto created digital gold, and Bitcoin is, in essence, digital gold on a big tech network. But now it checked all my criteria. It's something everybody in the world needs, nobody can stop, and nobody understands. In March of 2020, you could say, you know, you got there early. Max Kaiser will tell you, yeah, you should have figured it out back in 2013. But the point is, by 2020, it was a $200 billion thing. 99% of the world doesn't really understand it. How do you understand digital property on an open monetary protocol that's decentralized when there is no metaphor, there is no analogy to it in the last 5,000 years? A new thing. Nobody understood it. Everybody needs it, right? It's decentralized. Nobody's going to stop it, right? They might slow it down, they might FUD it, but that was the beautiful triple check criteria. And I said, I have the $500 million problem. I think I'm going to buy me some. So that's how I discovered Bitcoin. And that's why it became the most important thing in my world in the second quarter of 2020.
Did that process take you days or weeks until you, was your brain like, was it a 3-day thing where you were like, you're getting excited about it, and all of a sudden you're like, I know this is the right way? Or was it weeks before you knew this was what you were
the first 5 or 6 times people mentioned it to me, I just dismissed it as like a risky, complicated, cool. I knew it was cool. I knew it was a cool thing, a decentralized network. I knew other people were passionate about it. I didn't have the problem. You kept tugging on my coat, but I didn't have the problem. I'm like, go away. I'm making a lot of money on my Amazon stock. I'm making a lot of money on Apple. I have a problem in my business. Before, if you had asked me, do you want to meet via Zoom in February of 2020? I was like, what is Zoom? If you said, can I work from home? No, you're fired. What about remote work? No, you come into the office, we meet face to face. If you'd asked me the same question in April, I would have said, well, of course we use Zoom. We're standardized on it. We all work remote. We went from 10 million people on Zoom to 400 million people on Zoom in 4 weeks or something. The world accelerated its digital transformation of sales, of marketing, etc. If I had gone into my board of directors in February and said, I think we should buy 500 million worth of Bitcoin, they would have said, what is Bitcoin? You're out of your mind. You're crazy. It took, this is the history of science is the history of paradigm shift. And the one thing you learn when you study the history of science is paradigm shifts come two ways. Either the old guard dies, everybody dies, and the new generation picks up the thing, or there's a war, and you're going to die if you don't actually learn a new thing. And so in the midst of a life or death war situation, then people have their minds open up and they embrace a new idea, right? That's the history, that I could go through 5,000 years of history. I could tell you people that had paradigm shifts driven by war or driven by the death of the old guard. We had a war on COVID, and we had a war on currency. The war on COVID locked down the entire world, and the currency war, the response of the policymakers was literally to declare war on the currency. The US currency has been devalued by depending upon your metric, 20 to 35% in the last 12 months. But currency in other places, Argentina's got 85% inflation. The currency in Venezuela, they're collapsing 60, 70, 80%, right? And so what you have is a devaluation of currency. The war on currency means we're squeezing all the economic energy out of the currency, right? And where does it go? Well, it goes into bonds, and then everybody that held bonds as a store of value sells their bonds, and they move their money into equities and into real estate. And so you're seeing monetary energy surging from the currency to the bonds, to the equity, to the real estate, to collectibles, to cryptocurrencies, to meme stocks, right? That was the war. So how long did it take me to figure it out? Well, after March, I mean, the first thing we do is we deal with the lockdowns, and you've got an immediate issue at hand. You know, you've got thousands and thousands of employees and customers you got to take care of, and how do you rewire the business in a world where the office is closed and you're operating remotely? That took us a lot of Q2, and in the same time, as I'm studying my operational problem, and I'm basically doing a digital transformation of a 2,000-person software company, I actually start thinking about the transformation, in this case, the digital transformation of my balance sheet. And I would say, it takes 10 hours of study to start to get an inkling of what's going on. It takes 100 hours to start to be reasonably versed in what's happening here. And it takes 1,000 hours for a reasonable person to have a fair grasp of everything. If you want to be the ultimate master, you need 10,000 hours. Before you're comfortable laying on $1 billion position, you probably ought to have 1,000 hours. Before I convince you to risk huge amounts of money, you probably need 100 hours. And before you can ask me an intelligent question, you need 10 hours. So that's the path that we went down.
Was it hard to sell to your board? Were you concerned because you were a public company? And then did you expect more CEOs to follow? I know you talked Elon into it, and we can get into that, but were those other two issues, and did you have some trepidation when you went in?
We had a lot of trepidation. I mean, there was a lot of trepidation in the year 2020 for a lot of people, right? In every single business, across every dimension and every aspect of life. And we're still working through those issues today. We will be for probably, a number of years to come. The process was first me educating myself. So I went through those Andreas Antonopoulos videos. I read the Internet of Money, then I read the Bitcoin Standard, then I started, binge watching every other Bitcoin podcast, cryptocurrency analysis, starting, reading the bullish case for Bitcoin, reading, every essay I could find on the Internet. You can learn a lot on the Internet. You can learn a lot on YouTube. I figured out pretty quickly I could speed everything up to 150% and speed listen while I'm, so you're speed listening while you're eating dinner and you're absorbing a lot. Once you do that, you realize that you don't want to go back to like taking a 1 or 2 hour lecture a week over the course of the semester. Just like people binge watch Netflix, television series in a weekend. You start binge watching 30 hours of podcast at 150% speed with a little bit of skipping, and you find that in 10 hours you can cover a semester of content. So I did a lot of that. Once I got myself comfortable, then I put together a summary of materials, like 4 hours of videos and 10 documents or something like that I sent to all the officers and directors of my company. Then I started meeting with them individually. Then we started having group meetings. We got educated. Then we split up, and then the general counsel went off to do the legal review with our outside counsel and to retain other counsel. The CFO went off to do the accounting and the finance review with outside auditors and finance experts, and the board did their research. And then we came to a very elaborate process, Brian. We couldn't just buy 500 million of Bitcoin and put out a press release. We're a publicly traded company. So the first thing we do is we have a deliberation, and the conclusion is we're going to actually buy $250 million worth of something, and we're going to buy back $250 million worth of our stock. So the first press release and the first announcement is we've decided that we're going to invest $250 million of our capital in a treasury asset or a mixture of treasury assets. This may include stocks, bonds, real estate, gold, silver, Bitcoin, or cryptocurrencies, something like that. We let the market think about that. We also said we're going to buy back $250 million worth of our own stock over the next 12 months. We announced a share buyback program. Stock is $120 a share. $60 a share. And put that in perspective. It's a $500 million company with $600 million in value to the enterprise and $600 million in value to the cash. About 1.2 times revenue. At that point, we had concluded, we were going to generate a lot of cash flow, $70 to $90 million in cash flow a year. I mean, the digital transformation of the operation meant we weren't going to need capital to grow the business. We were going to generate a lot of capital because the things that were expensive, like throwing trade shows and flying around on airplanes and staying in hotels and spending money on all this advertising, that just all went away. So we knew we were going to generate cash. We knew we didn't need the cash. We announced this generally to the public. Crickets. Stock trades 20,000 shares a day. Nobody really notices. They don't care. 1 week later, we went to stage 2, where we said, okay, well, we've gone through our analysis. We've decided to buy 250 million worth of Bitcoin. We did it. Here's the announcement. And we're also announcing a Dutch tender offer. We're going to buy back $250 million worth of our stock in 20 days, and you can tender your shares for up to $140 a share. So in essence, the message is, if you don't like the Bitcoin strategy, this is your chance to get off the roller coaster, and you can get off with profit. You can sell your shares back to us at $140 a share. Stock's trading 121, 122 when we announced that. You've got 20 days to think about it. So the idea is, don't surprise anybody. I don't want to tell you, figure out what Bitcoin is, and you've got 5 minutes, right? That creates anxiety. You can't figure out in 5 minutes. The company has embarked on a novel new balance sheet strategy, and we're going to give you 20 days to figure out whether you're going to buy more, sell, or hold your current position. And should you decide you want out, the company's going to backstop you. We're going to buy the first $250 million worth of stock at a premium. So the market trades. First it trades into the 130s, then they think about it a bit, then it trades up past 140 and maybe past 150. Okay, so you've got kind of a put, you can put the stock back to the company at 140. You would think it would trade at least to 140. For 20 days, the shareholder base rotates. We want them to rotate. If you hate it, we want you to sell. If you love it, we want you to buy. At the end of the tender period, we don't know what's going to happen. We could have had $250 million tendered. We could have had none tendered. We had about $60 million worth of shares tendered. Okay, so we buy back $60 million worth of shares at $140 a share. Then we have $175 million of extra cash. We think about it. We have a board meeting. We adopt Bitcoin as our treasury reserve strategy, or our treasury reserve asset. So the next message to the market is, MicroStrategy is adopting Bitcoin as a treasury reserve asset. If we have excess capital from time to time, we're going to convert it into Bitcoin. Let the market think about that. Shortly thereafter, we bought 175 million worth of more Bitcoin. Now we bought 425 million worth of Bitcoin. Well, the people that are shareholder bases, you either are you long Bitcoin or are you short Bitcoin or are you neutral to Bitcoin? We don't have to convince everybody. We just have to be transparent with a group of people that happen to like Bitcoin. So, and maybe you could say, I just got to convince anybody, right? It's like, I'm not trying to convince 100% of the people that they should love Bitcoin. I'm just trying to find the 1% that like Bitcoin and then act with transparency and integrity and offer them a publicly traded company where they can invest in such a strategy. So at that point, we had 425 million worth of Bitcoin. We started to communicate why we did it. We thought it's digital gold. It's smarter, faster, stronger than traditional gold. And it offers a monetary inflation hedge. The world starts to digest that. Our stock trades up. Bitcoin trades up. At some point, our stock trades up to 200. Then it trades up to 250. Then people discover maybe this is a good idea to own Bitcoin. We buy the Bitcoin the first thing we bought, it was like 11,800. People are like, you're crazy. You're taking all this risk. It traded down to 10,000. We bought some more. They thought you're double crazy. We took the risk. I'm like, I don't think I'm crazy. I think I'm, well, what are you going to do if it trades up or down? And the answer is, I'm not a speculator. I'm not a trader. I don't care whether it trades up or down. I'm holding it they're like, well, how am I going to hold it? Well, forever. I'm holding it forever. It's property. I mean, a decade you want a time frame, a decade we can mark it. I mean, short time frame is 4 years to figure out whether it worked out in the short time frame. Mid time frame is a decade. Reasonable time frame is 100 years. That's why we bought it. People thought that was kind of crazy. Like, are you speculating? No, I'm not speculating. Okay, it takes a while. People don't, they don't quite figure it out. At some point, our stock traded up. Well, all of a sudden our stock trades up to a 10-year high. We keep making money. Our employees exercise some stock options. We make more money. We have more cash. We go buy $50 million worth more Bitcoin. I think we buy another 75 million worth of Bitcoin. Now we bought 500 million worth of Bitcoin. Bitcoin doubles. We've made $500 million. The stock has doubled. At that point, the stock gets to $300 a share. It's more than it's best in a decade. We go to the market and we offer to sell $400 million of a convert bond. The market loves the idea of a convert bond. Okay, here's the idea. We're going to basically raise $400 million. We're going to buy Bitcoin with it. If Bitcoin goes down, you still got the bond. If Bitcoin goes up, you've got the upside of Bitcoin. Where else can I buy a Bitcoin bond that makes me money if Bitcoin goes up and doesn't lose me money if Bitcoin goes down? I've got a software company standing behind it. Okay, people wanted to buy that bond. We were quadruple oversubscribed, so we raised the bond from 400 million to 650 million. We paid 75 basis points in interest. We borrowed $650 million at less than 1% interest. We bought Bitcoin. We bought the Bitcoin around 20,000. Bitcoin kept going up. That bond was the best performing bond in the year in the U.S. No one had a better bond. Okay. At this point, people are starting to think that MicroStrategy likes Bitcoin. Bitcoin keeps going up. MicroStrategy stock goes to 1,000. When it gets to 1,000, we go back to the market to offer a $600 million bond between 0 and 50 basis points yield. 40 to 37 to 50% premium. The bond's oversubscribed. We make that bond a $1,050 million bond. We sell it at a 50% premium.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.